Welcome to In It to Win It Live. This is Steve Barton, and thank you for tuning in. We're going to be pulling up some charts, taking your questions, and let's start out here with gold. So, big update here for gold, up almost 1%. But what is really exciting about this one is if we go to our handy dandy little tool over here, the horizontal ray, we can see that the last all-time high here on the futures market was 43.98. So that's pretty exciting. We've moved past that. We're about $100 above that now. Looking really, really good here. So basically, my next target here for gold is going to be about 51 or 5,200. And the way I'm getting that is there's basically a kind of a triangle pattern right here. If you were to connect those dots like that, and then you basically got a pole that comes down right here. And the way you can measure these for the next target is you basically take the bottom of that up to the top of this, and then you string this out kind of right where it broke out, right there. String it down, pull it up, and we can see that that's around 5,200. So that's kind of my next upside target here for gold. Dr. Hemp, good to see you. Thank you for coming in, sir. Okay, and now that's my target for gold, 5,200. Looking pretty good on the volume here. We are starting to see a little bit of tick up here in volume, which is good. High RSI and high MACD, but we are in a gold bull market, so I'm not going to look too much into that. Now, moving on to silver here, probably the story of the week, just continues to be. We've got another new all-time high today, which seems to happen every single day. We've got a high in the futures market up to 71.26. We'll probably breach that here in the next 10 minutes. And basically, so my total target for silver, I got a few questions on this, is let me just zoom out here on the long term, and then we can take a look here. So we've got this giant basing pattern, right, that lasts about 45 years, and we finally broke out just a few weeks ago. So I think the way most technicians are going to measure this, and I'm going to measure it the same way, because remember, it just kind of becomes this self-fulfilling prophecy when we're all looking at the same thing, is you take the bottom of this last pattern here, this kind of cupish pattern, and you take it to the breakout, right, to the top right there, and then we extend this up over the breakout. It goes right there. And then we can see that that target is around 96 bucks. Okay, so just round it to 100 or so. So that's one way that I'm looking at it on the charts to take some profits. I got some questions on that for SILJ. How do I know when to get out of this thing? I think it's going to be less chart patterns here on SILJ and more chart patterns with silver itself. And once we get up to that $100 level, there's some things that I'm looking for in silver. First of all, for it to get up to that $96 $100 level. Second of all, I want to see a gold to silver ratio that is sub 45. Okay, so around 45 or so, but a little bit less than that. Right now we're at 63. Okay, this is on the monthly chart. But this is kind of like my idiot proof line right here. Is when we get down to 45, I need to wake up and start selling some of these miners, right? I think it'll go lower than that. I mean, I think it's probably going to go into the 30s, but why not take some profits, right? Other things I'm going to be looking for is for junk silver, constitutional silver, the silver dimes and quarters. I want those to be selling at a massive premium. I want massive fear, right? Right now, those are selling at a discount. If you go to all these coin dealers, you see them online, they're selling junk silver at a discount. They're selling it for cheaper than spot price. I want to see that at a radical premium, because that's when people are terrified and they think that the dollar is dying and their currency is dying and they're only going to be able to fill up their car with gas with silver dimes and quarters. I've seen that before, and we don't see any of that right now. So actually, if I was a kid and I had a bunch of, Silver Eagles or something, you could trade those Silver Eagles right now for a premium and actually get more than spot price. And you could trade those for junk silver and actually get more silver out of it, right? Then when this fear comes back that I'm talking about, you basically trade the junk silver back and you get even more, right? That could be a play that you could do. Another thing I want to see is I want to see lines around the block. at these coin shops, and I have seen absolutely none of that. We saw that for a hot minute in Hong Kong and Australia, and then it just went away. So I want to see that in my home country, in my hometown, and that I think will be a pretty good wake-up call that, hey, it's time to let these things go. All right, so that's silver. And then I'm going to move down here to probably the second story of the day. We've got platinum is up almost 10% as of this moment. And if we go out here for long-term on the platinum chart, we can see the all-time high rate here is at 2308. And we are tapping on the door of that. We'll probably hit it today. Let's see, the high got up in the futures market to 22.97. So we just got, I don't know, $11 shy of that. Basically hitting it now. So I've been getting a lot of questions on platinum as well and when to take profits. And I know a lot of you guys have been with me when we were buying platinum down here at $900 an ounce. And now you're sitting at almost 2,300. Okay. And my opinion is if this is what you're, if you're nervous and you're having a hard time sleeping, is just move past the point of concern. Right? Or as Rick calls it, the point of no concern. So basically sell enough that you get your position back, and then now the rest is free. I think this is going to blow past this all-time high like a hot knife through butter. There probably will be some profit taking, and so maybe it'll go through here, and then it'll come back down here and kind of settle on this line. But as soon as it moves above this, this is now support. And I think that there's going to be more and more people that are getting into this, and I think that the way I'm playing it is I'm playing it with the ratios. Okay, so what is platinum divided by gold? And once that gets to parity, once, you know, for example, platinum's at $5,000 an ounce and gold is at $5,000 an ounce, then I'll start offloading my position, but I'm not doing it before that. I'm not playing it on price. And I might amend that. I might change that, but for now, that's what I'm thinking. I expected this to happen, and it's happening, and now I'm letting it play out. Okay? And Palladium, this is pretty exciting, doing the same kind of thing. We did have some resistance right here around the 1800 level. It looked like it stopped there for about a day and then just blew right through it. So next resistance level that I really see on Palladium is going to be, I'd put it right around here, around 2200 or so. You get quite a bit of resistance right there for Palladium, but it looks like all systems go, and I think you just put a 5% trailing stop loss on this if you got this as a trade and let it run. All right, so some opportunities I see coming up here. Oh, by the way, Merry Christmas, guys, or Happy Holidays or Happy Hanukkah, whichever ones you guys celebrate. Only a couple days away. Pretty exciting. Had an awesome year. Been absolutely incredible, and thank you guys for all your support. Good to see you guys. Zanzibar, and we got Andrew and Eric, and, of course, Dr. Hemp. I'm trying to remember your name. I think it's George. Good to see you guys. Okay, yeah, we'll be pulling those up in just a sec. I want to go over one thing first, and that is back here. Let me pull up the oil chart. And this was a trade that I did. Basically, I bought oil down here when it went negative, and then I sold it up here when it was around 115, 120. Okay, but kind of when you rotate out of these things, this is what I love about commodities, is that they're so radically volatile. And because they have these supply crunches, they act a lot different than, other markets, right? Because there can be radical supply squeezes that take years to develop. And then finally they go parabolic, like we're seeing with silver now. You know, there's been a deficit in silver for, 5 years or something. And it looks like it's finally taken place. You know, Samsung's buying up, guaranteed Silverstorm's first 2-year supply. It wasn't very much of a deal. It was only $7 million, but still it's saying something that the companies are getting in there and trying to get access to those mines before everyone else. All right, so this was the oil trade I did. I basically sold out of the S&P. The crash happened, then I got back into the S&P, and then I got everything into oil, which was the most I've ever bet on one sector. And luckily I was right, and we're all still driving cars, and just made an absolute killing out of that. Well, once I sold it up here, I had to put it into something else. I was really heavy cash, and so what I found was I found that uranium was probably going to make another run. my brother had been telling me about uranium back here, and then it had a nice little spike up, and I'm like, oh, maybe this guy knows what he's talking about. And so that's when I started having Justin Hune on the show, and I'm like, oh my God, this is where I need to put my oil money, right? So I made a lot of money out of oil, put it into uranium. Oil has since just been going down into the toilet, and uranium shot up, and then I sold uranium right up here, okay? So I'm going somewhere with this. Let me pull up the uranium chart. Okay, so now the backdrop here is uranium. I'm going to make this line chart so that it's a little bit easier to see, and then I'll get rid of these moving averages. Okay, so this line chart right here is uranium. Okay, this is where we sold out of uranium. And then I'm going to add the gold chart on here. So gold is in yellow, and we sold out of uranium here, and we put it into gold right here. Now, why did we do that? Well, for the fundamentals, for one, told us that uranium was overpriced. The spot market was showing that uranium was selling for $108 a pound, and the term market, meaning that what you have to pay for it 12 months or longer from now, it was selling for 72. So it had gotten way ahead of its skis, and it was time to get out, not completely get out, I didn't sell everything, but get out of most of uranium. So we did. We had to put it somewhere, either cash. We ended up putting it in gold. Why did we put it in gold? Because gold had been, if we just pay attention to the yellow line here, gold had been running let me get this out of the way, and this, open it up a little bit. So gold had been going in this long cup and handle pattern and had been just going sideways here, and it looked like a pretty good time to get into gold because we're building out this long cup and handle right here. Now, the cup portion took about 9 years to form. Typically, I think the handle can kind of go about half the distance of the cup. After that, I think you kind of got to negate the pattern, or at least it becomes a lot less certain. So we're 3.5 years into this handle formation. I figured we could have another year to go. And sometimes you're a little better than lucky than good, and that's exactly when we got into gold and it moved up, right? So now that we can see the future, that was a good decision. I think we have another moment like that coming up now. And I will show you what it looks like here. If we go and we pull up the gold chart, okay, so gold here is in that kind of gray line. And actually, you know what I'll do is I will make this, I'm going to make it a golden line because it's gold. There we go. All right, and then I'll also pull up the oil chart. Where is oil? I guess I got to type it in. All right. CL1 exclamation point. All right. New price scale. Boom. All right. We're not going to have that one be yellow because that's the same color as gold. So we'll make that one kind of like a gray. There we go. And you know what? Just for funsies, I will pull up the silver chart as well. New price scale. Okay. Now take a look at the right side of this chart. We have gold screaming higher. We've got silver screaming higher. We've got oil in the toilet. Okay? I think we're at another one of these moments here. Now, to be perfectly clear, I think that gold and silver are going vertical, which is evidenced by the chart. But at some point, you got to pay yourself, right? So I think this is a pretty good move to start trimming our gold and silver positions and putting it into the next thing, just like we did with oil, putting it into uranium. And just like we did once uranium had its run, we took out uranium and we put it into gold, right? And some silver miners. Now, these have had an amazing run, and I still think they got more to go. I think gold is probably going to 8,000. When you look at past gold bull markets, you can have an 8x. I think it started at 1,000, and we're probably going up to at least 8x. I think silver is going to 96, $100, so I think we got more to run, but we got to have a plan in place. And where are we going to put that, right? We're just trading, these metals, pure money, for something else. I don't know that it's great to keep them in dollars or your local currency. I'd rather put them into a cash flowing, profitable oil company. All right. So going forward, as this parabolic move continues, I'm going to be trimming some of my gold and silver stocks, and I'm going to be putting them into some high quality dividend paying oil stocks. All right. Oil, uranium, got that one. Okay, let's get to some of the questions that came in. Barbara, thank you for the support. Hey, Steve, thanks for all you do and your team do. You're welcome. Thank you for being here, Barbara. I appreciate it. Charting is important, but I think under the circumstances, I think gold and silver will keep running. I agree. I agree. I think it will keep running as well. I think we're going to have, this is a lot of fun to be in and participating in this bull market that we've essentially been anticipating for about 3 or 4 years. You know, longtime listeners will remember just trying to bottom pick this thing on when this handle was forming out. And then finally, we've just been off to the races. And this has just been a real delight. And it's great to see that both of them are breaking out now. Probably got just up days continuing here, at least for the near term. Now, remember, as Rick says, we're probably going to have somewhere between a 25 or 30% pullback at any moment. Could be tomorrow, could be 6 months from now in gold, and that will drag silver down even further. But the problem is you don't know when that's going to come. We just know it's going to come, right? So does it come tomorrow and we get a pullback down to, what would 25% be? That would be around 3,300, 3,400. Or does it happen once gold is way up here at, we'll say it gets to our next target and it gets up to 5,200? Do we have that 25% pullback and it gets down? Oh, I gotta move this. There we go. And it gets down to, what would that bring us down to? About 4,000, 3,900. So does it happen then? Or does it happen at 6,000? Like, nobody knows. So I think at this point, we're in a confirmed bull market. You pretty much just have to throw your hat in the market. And, you know, if you have nothing, maybe a 10% position just to get your foot in the door, I think it's prudent. Okay, Highcroft Mining. Got a lot of questions on this one, and I pulled it up, and now I see why. I missed this one. Yeah, I guess they got rid of a lot of their debt, and it just gapped up pretty radically so over the last couple of days. Looks like that's almost a double in a couple of days. Yeah, 72% in 2 days. That's pretty impressive. I guess $71 silver helps quite a bit. I saw in a news release, too, that they also hit a high-grade hit on their Vortex silver system. So good for them. I missed it. I was not in Highcroft, although I'm regretting that decision now. Dustin says, Steve, could you include nat gas in your chart? Yes, sir. I pull it up every week on Monday Market Moves. I think I do it in the premium version, too. Maybe I don't. Anyhow. Right here on nat gas, basically, so we've had this kind of nice run up right here in nat gas, then had a, looks like it's forming a bit of a bear flag. So it kind of goes down like this and then starting to form out. It's more, basically what it is it's kind of like a sell-off, and then it's kind of consolidation here, likely before it moves down again. Okay, so usually when you see a pattern like this, that means that it's probably going to go to the downside. I will say that it does look like a little bit of kind of like a megaphone right here, which just means increased volatility. So when this does break, it's probably going to break kind of violently like it did here, up or down. But I think the likelihood, it's more likely that it will move down than up. Okay? And you can take the measured target on this just like any other bull or bear flag pattern. You just run the top to the bottom, and then you measure it down to the breakout. And so it could get down to $2 for natural gas, although I think that's highly unlikely, especially in winter. So anyways, more likely down than up, I think. Dustin. All right, Ronnie says, great job as usual, Steve. Thank you. Thanks for being here. Thanks for the support. Given that there's strong chance that oil gets absolutely hammered, what are your new entry points below your green lines? Okay, I'll hit those two companies in the weekend update, and then XLE. Okay, so let's pull up XLE here. All right, so got some XLE this morning, and if we had to go below where the green lines are here on XLE, this pattern sticking out to me right away is it kind of looks like a bearish pennant, right? So basically a bear flag, but kind of shaped like a triangle instead of like a flag pattern like that, right? And if we take the measured downside target of that, we just go from the top of the pole down to the bottom, and then the breakout would be kind of basically where I bought. And we could get a downside target here of around 41, 42 bucks. So if I had to put green lines below where the green lines are, Ronnie, this is where I would do it. Let me string this out, go to the weekly here. And this is where I'd put it. So I'd have one right here at 41.50. Okay, so that's below the 42.50 line. There's a decent amount. And all I'm doing is I'm just looking back, boom. Oh, there's a hit. There's a hit. A lot of support there. A lot of support there. Also acted as resistance. Okay, so that's kind of how I'm getting these lines here. All right. Also using the moving averages. Although in this case, it doesn't really hit around any. So 41.50, and then after that, 39 bucks. I don't think it will get to $39, probably just a few percent chance, but you never know. Maybe if we get a real washout in these things, then we'll get lucky and we'll get the oil equities even cheaper. I think oil right now is kind of like gold was when it was just sideways in that cup and in the handle part of the cup and handle pattern. I think that it's really cheap. I think it's going to get cheaper. And we should be buying oil equities now so that we're not playing catch up and chasing this thing on the run up. Let's see. Mir live stream. Okay, yeah. So we talked about SILJ. So as far as price targets on SILJ, Mir, this is I'm basically playing it off of silver. So when silver gets up to 100, when we start to see some of those fundamental things that I'm talking about, where junk silver is selling at a premium, stuff like that. Then I'll start taking profits in SILJ, but I don't really plan on taking anything out here until we start seeing those. Okay? All right, let's go to some questions in the chat. Let's see where we are. Face melting rise in metals. Yes. The only time you get your face ripped off is when you're actually in it, right? Okay, what else do we got? Zanzibar, it's hard to bank metals profits when profits are from people fleeing the banks. All right. Samu is, hi, Global Atomic and Kazatomprom. Okay, let's pull that one up. Let's see. I'm trying to remember the ticker on Global Atomic. Okay, so if you want a company, remember full company name, ticker symbol, and exchange. That'll help alleviate a lot of Global Atomic. So I'm just going to pull up Global Atomic on the TSX. I don't know if you wanted the OTC or which one you wanted. Let's see here. We've got, that's interesting. I'm very curious to see what happens here too with Uranium Royalty Company. If anything's going to come out of here, I'm afraid that Russia is basically going to take over this asset. And that's one of the reasons that I got out of this thing. I was in this for a hot minute. Okay, so as far as I see it, if I had to put in some lines here, I like one right there. 45 cents. I think that is a decent one. Let me move that up. I'll make that about yellow. And then if I was going to put in a red line, it would probably be around that 200-day moving average. So basically right around there. What is that, 65 cents? Something like that on the TSX? Yeah. Okay, and then what else did you say? You said Kazatomprom. All right, the biggest uranium miner on the planet. I know that ticker symbol. KAP. Okay. I was in this one as well for a long time, and then I finally got out. And, all right, well, you got the 200 moving average right down. Wow, that's a massive selling. I wonder what happened that day. All right, you got the 200-day moving average right here. That's around 45 bucks. We're at $52 a share now. Pattern I see that sticks out right away at me, and maybe you guys already see it, is we've got this bear flag right here. Okay, so that it's kind of forming out to be moving on from a toddler to another couple of days, and this will be like a teenager bear flag. So a little more consolidation here, but definitely looks like it's ironing up to go down, at least from what I see in the charts. The moving averages are in the wrong order. Actually, they're in the right order, but sloping towards the wrong order, sloping down. Looks kind of bearish to me. So I'd be looking at around that 200-day moving average, around 45 bucks. And this also looks like a boatload of support right back here, 43, 44, 45 bucks, which would line up fairly decently with the 200-day moving average. All right. Fair, what's up? How's it going? Me and my friend took a trade in MindMed. It's going to break out to 1550 soon. Cool. I'm not familiar with that one. What's going on with uranium in 2026? Chop Liver wants to know. I like the screen name. Let's see. What's going on with uranium in 2026? Okay, so basically where we are, this is the uranium chart. Let me make it a line chart here just so you guys can see it a little bit better. Okay, so pay attention to the yellow. There we go. All right, so here's a line chart of uranium. And what I see right now is the term price. If we go to Cameco, and anyone can bring this up, I'll pull it up right here and bring it up in the background so that you guys can see. And play the Jeopardy music as I pull it up. Where is it? There it is. Okay, so make sure I can do this. Is it working? I think it's working. Almost. There we go. All right, so scroll down, and here, this is where you can see the spot price and the term price of, thanks to our friends at Cameco. They track this using UXC. And right now, the spot price is around, it's showing here at 75.80, but we know from the chart it's 81. And the term price is 86. So what that means is we still have some more upside here in the near term, and it's got to go up to around, oops, wrong button. I swear I've done this before. There we go. It's got to go up to around here before the term price and the spot price match up. So near term, I think we have at least that. I think that it's going to at least go up to there. You also do have a little bit of resistance right there. Maybe that's not even worth drawing the line. Yeah, I think it's going to go higher. I think for 2026, to answer your question, I think we're going to have a repeat of something like this. Maybe not quite as parabolic, but I definitely think that the spot price will catch up and exceed the term price, just like it's done many cycles before, and we'll take profits. We started buying uranium equities again down here and selling a little bit up here, and just started buying some more again. And I think we're going to repeat that. I think we'll go higher. I look at uranium as like, you get like 1 year you should be buying, and the next year you should be selling, and then 1 year you should be buying, and the next year you should be selling. Like there's some guys I think that have just kind of bought and held, and you don't get you got to trade this thing, in my opinion. If you just buy and hold, then you're not making nearly as much money as you should in this thing. It's so volatile, you got to take advantage of that, and that's one of the reasons that I'm so attracted to it, is because of this volatility. So short answer to a really long one is I think it's going up. I think it'll exceed the term price. I think we'll take profits again, and then we'll rinse and repeat the game again in 2027. All right. Thank you, Chop Liver, for the question. William, what's up, William? How you doing? Hi, Steve. Do you see any equities flopping into commodities in a way that all over the stock market still climbs, no big crash? I don't think I understand the question. Can you see any equities flopping into commodities in a way that all over the stock market still climbs, no big crash? Maybe can you rewrite that, William? I don't understand it. Matt, what's up, Matt? Gold has had lots of fundamental reasons for its growth. What fundamentals do you see that make you think oil will increase? Well, first and foremost, we are burning more barrels of oil every single year. That is, I think we're consuming about 104 million barrels a day right now. Next year, we're forecast to burn 1 million more barrels a day going into the future. I also think that there's been a pretty radical underinvestment in exploration when it comes to the oil companies. Let me throw up the oil chart here while we're talking about it. I think that there's been a pretty radical underinvestment. So basically, a lot of our first world big thinkers have told oil companies that we're all going to solar and we're all going to be driving electric cars and everything will be butterflies and ice cream. And as that has happened, it actually hasn't played out. So we're still driving gasoline and diesel, and electric trucks are not moving all of our Amazon goods to and from everywhere on the planet. We're using diesel, and we're using more of it. So I think there's this underinvestment that's going to have to take place. In the meantime, oil companies have just been paying out. They've gotten a lot of extra cash. When you look at some of the companies, they're paying down debt and they're buying back shares. So when they buy back shares, think of it like a pizza, right? And let's say that pizza is sliced into 100 different slices, and you're a shareholder and you own one share of those 100. So you've got a little tiny sliver of pizza because it's 1/100th of it, right? Well, as they're buying back shares, they buy back some of those shares so they become more valuable, because now, let's say you go through one quarter and we'll say this company no longer has 100 shares, they only have 90. Well, now you have 1/90th of the piece of pizza instead of 1/100th, right? So as this goes on, and I think that these companies are going to continue to do that. I think they're going to continue to pay down debt. I think they're going to continue to increase their dividends, and I think we'll be recipients of that. And there's some companies out there that actually haven't been doing what a lot of them are doing and underinvesting in this. So I guess what I'm getting at is I think that it's creating this squeeze, right? If they haven't been exploring and looking for new projects that take half a decade to get online, right? If they haven't been doing that, then there's going to be a squeeze, I think, taking the price of oil somewhere, in the 40s or 50s, whatever it gets down to, probably up into the 80s and above. And if that happens, those oil equities should radically re-rate, not only because of the price, but because of decreased supply. All right? That's my basic thesis. Merry Christmas. Merry Christmas. Fair, Steve, what are your top 5 single company dividend stocks for the long term? I've been getting a lot of questions on that. I'll do a video for the premium, and we'll put in there it's basically like a retirement kind of portfolio. Like what companies, what stocks would I pick if I had to pick it for a retirement portfolio? And so there's going to be a lot of companies that I was kind of alluding to, and probably no or very, very minimal junior exploration stocks, okay? So there's not going to be any junior silver miners in there. If there is, it'll just be a little smidge, like 5%. William, tee-hee, I'm dyslexic. Oh, all right. Well, no problem there. Thank you, bud. Okay. Can you see the general equities flopping into commodities such that overall stock market still climbs, but no big crash? Oh, I think what you're saying is that do I see basically a crash in the S&P 500, or do I see basically no crash in the S&P 500, maybe just kind of like a slow bleed? Is that kind of your question? Could be. Let me get my indicators back right here. So I'll bring up the general market. Okay, let me get my cup of coffee here. Oh, we just passed it. Okay, I was looking at this before we push record. So the last few days, I've basically been saying that I think this is the all-time high right here. It's at 6,920. And I thought we'd get up to this point this week, which so far has happened, and we just exceeded it since I pressed record half an hour ago. So this previous high right here was 69.03, and we are sitting now at 69.04. So since we passed that, it does look like we're probably either the rest of today or tomorrow. Tomorrow's only half day, then we got Christmas off, and then it should be back up on the 26th. We're probably going to go up here and touch all-time highs. So maybe we will hit new all-time highs. I don't know that we'll get a, could a total reposition of general investments sustain the overall stock market, cause increase? Thank you. Equities into commodities. Not sure I totally understand the question, William, but I think you're basically saying that, could we have the commodities doing well and the stock market doing well? Yeah, I suppose so. I mean, as governments print, there's more dollars available. Those dollars have to go into something, and I just think that the commodities are going to outperform the S&P 500. So I think that you would be better off having your money, even if the S&P 500 still climbs. I think that commodities will climb more, and I think that's where you're going to want to be. Okay. You're welcome, sir. So everybody is in safe haven with silver and gold, but we still have a healthy S&P 500, et cetera. Yeah, and remember, like the market cap of the S&P is, I don't know how many trillions now, but just absolutely massive. I mean, heck, NVIDIA alone is worth trillions. And, and when you add up, Adrian Day did a really neat presentation on this in the Real Classroom Plus, and he basically added up the market cap. I think it was NVIDIA, Apple, Google, and Microsoft. It was like 4 or 5 out of the Mag 7, and that exceeded the market cap of all the gold on the planet ever mined since the beginning of time. All right, so we got to remember too that, gold and silver, these are very niche markets. They are a very, very small market. It doesn't take a whole lot of money coming into these things to really have a parabolic move. Case in point, like we're seeing, this is a very, very small market cap. And so, it doesn't need a whole bunch of money coming into this thing. When you look at some of the family offices, they have almost no gold and silver in their portfolios. And that's slowly changing. And I think it's being reflected in the charts. Chop liver. Do you invest in collectibles? Not really. Do you mean like collectible coins or collectible cars? Not really. As far as no, I really don't. No, I don't have any Picassos or anything, if that's what you mean. But tell me what you mean. Do you mean collectible coins, or do you mean collectible paintings, or what? Give me a little more. Any other opportunities I see? Let's see. Copper, still looking great. I think you're going to want to be in copper equities here. I'm less and less afraid of a pullback here in copper. I think that we've got plenty of room to run here on copper. I think you're going to want to be invested in it. COPX is breaking out, so a lot of these copper equities have had kind of a semi-bullish pattern here, a little bit of a pennant. Same kind of thing here with COPJ. We did have a sell-off here in COPJ. The only reason for that was their dividend. They paid out a pretty hefty dividend, so it drove the price down, and now it's on its way back up. So looking good for copper. I really don't see anything that's jumping out at me other than like platinum and silver. Platinum is absolutely fantastic. Just shooting the moon here. Probably going to hit an all-time high tomorrow. So pretty cool. And China is getting way more into the platinum market. They started up their own futures exchange in Shanghai for platinum. So that's fantastic. That is some really, really bullish news. Anything. Any collectibles? No, not really. One thing that I will say that does perform well during inflationary environments, and I don't know if it would go into collectibles, but I noticed this in the Great Financial Crisis in 2008. At the time, I was getting my pilot's license. I'm a pilot. I don't fly for an airline or nothing, but I've got a little puddle jumper, right? And when I was getting my license, I noticed that all these planes started showing up at the airport, but they never moved, right? They were just parked there. And I was asking my flight instructor about that. I'm like, who the heck is like showing up with all these planes? Why are all these Cessnas showing up on the tarmac? But I've never seen the things move. They're just collecting dust with a cover on it. And he said there's a whole bunch of wealthy guys have started buying up brand new Cessnas, and they're just parking them here. And I'm like, you mean they don't even fly? And he said, no, they're not pilots. They don't fly. They're just doing it as a way to store their wealth. So that is a thing that you could do. I've noticed that with my plane. My plane has more than doubled in value in the last few years. And when you think about it, the plane is actually worth less, right? The paint job is 4 or 5 years older. The motor is 4 or 5 years older. The motor has an extra 300 hours on it that it didn't have a few years ago, right? Because I've flown it. the plane should be worth less, but what's happened is they printed a bunch of those dollars, and so now it takes more of those dollars to buy the same plane. So that is one way, I guess, that you could store it. Another way is like collectible cars. My dad's got an old 56 and Chevy Bel Air, and that thing has tripled in value in the last decade. The car's not worth anymore. Well, maybe in that one it is because it is a little more rare, but that's done really well. As far as any collectibles, no, I really don't have anything other than that. But anyway, just my thoughts. All right. Blaine, good to see you, man. The only collectibles I'm interested in is Beanie Babies. Blaine's our resident comedian. You know, I was walking around at a swap meet a few months ago, and I saw some of those Beanie Babies, and I remember the craze in those things. They just look like a bunch of dirty stuffed animals at the moment. Christoph wants to know, Steve, what is your opinion on Metalla royalty? All right, let's pull up Metalla. I know that ticker symbol. MTA. I'm going to pull it up on the NYSE. Boom. All right, I used to be in this thing. I'm not anymore. I basically sold it for a tiny little profit, and then after that, it just ran to the moon. So, joke's on me. Let's see. Oh, maybe I didn't sell it for a profit. We had this one back here. I'd have to look back at the books. I don't remember. All right. What do we see here as far as a pattern, Christoph? Well, one thing that's, it is kind of following the gold pattern a little bit. What I do see here, and maybe you guys can already see this. I'll make this bigger, and I'll zoom in just a little bit, is we just kind of got a series of bull flags. So you got one right here, right? Kind of a loose one right here. We got another one right there. And then kind of a bunch of little baby bull flags just all the way along. Now, as far as where would I see this going as far as the next resistance? Well, a lot of that depends on the price of gold and silver. Definitely some resistance right up there where we are now, around 850. Next resistance after that is going to be just shy of $10. Then 1075, and then of course the all-time high here at 1350, somewhere in that range. So if you like this company and you follow it, I would treat kind of gold and silver stocks, maybe trim as we're talking about to put some of it into oil. But yeah, this is a very bullish looking chart. Yeah, I wouldn't be a seller. I'm just going to try to... kind of a neat little parallel channel right there. That could give you entry points if you wanted some. I'd like an entry point. 770 looks really good. Or at the bottom part of that trend line around $8, just 30 cents shy of where we are now. Okay. William. Well, I'm going to mispronounce that. Rendium is an important byproduct of copper mining required for airplane turbine blades, both commercial and military, I'm told. Cool. Any thoughts on tungsten? Matt, I've been looking at On Gold recently, who may have a tungsten play. I was talking with Peter Granich about tungsten, and yeah, all right, let me pull this one up. What was it? On Gold? Is that the ticker, I wonder? I haven't heard of this one. On Gold Resources. All right, there it is on the TSX. Yeah, I've heard at least that Rick wrote an article up on tungsten as well, that we're pretty dependent on China for it. It's extremely difficult to mine and to process. It kind of turns into dust, and then you almost have to mine it like on an atomic level. This does look to me like a bull pennant. So this looks like a lot of, okay, so we got this coming up, coming down, and then kind of like a flag / pennant pattern right there. So it looks pretty bullish. If I think now is okay. I would try to time this 200-day moving average. You got low RSI, low MACD down here. Now, caveat, I don't know anything about this company. I'm guessing, 40 million Canadian. So very small market cap, limit orders only. A lot of selling today. What is that? Over 500,000 shares, which might be one of their biggest days so far here on the TSX. Yeah, this is their biggest day so far as share volume. and most of it's selling. So I don't know if something happened with the company, but a lot of people are letting it go. If you like it, I think this looks decent on the charts and probably ready for a reversal. So those are my thoughts, Matt. Okay, entry points on silver. Could it go back to 65? Silver could go back to 40. Let's pull this one up here. All right, so these are my support lines, we'll say, for silver. All right, TT, here we go. All right, so first and foremost, you can look at some little baby support lines right here. So we got like a little one right here around 60, and all that is it's just, you know, some horizontal support right across from that bull flag, okay? So pretty much anywhere down to there. The main big support lines that I'm watching for silver are going to be this white trend line that every single trader on the planet has drawn on his charts that goes back from 1980 to 2011 and then hit right here, okay? That one puts you at around 54 or 55 bucks, depending on when it retraces back to it, if it does. If it retraces back to it, you know, it could be up at 54 and a half by the time it gets there. Who knows? But that's basically the main big support line. After that, we got the psychological level at $50. So we'll just put in some string lines right here. The psychological level of $50. And then after that, there is quite a bit of price action around 48. So I think that's definitely worth mentioning. 48. You know, it's only a couple bucks below 50, but I think that's a pretty important support level. After that, you could kind of hunt and peck around here, but the one I like a lot is just this rising 200-day moving average as a real baseline of support. Right now, that 200 moving average is at $41.50, and it's rising every single day. But those are the main levels of support that I would look for on silver. I'm basically acting as this 200-day moving average is the floor. Like, I don't think it'll get below this 200 moving average. It might, okay? When we go back here over history on silver, we have some radical re-ratings that happen, which is another, you know, this is why we like this market, just like we like uranium, because you can have these radical pullbacks right here, you know? And same thing here in the bull market. I mean, look at how fast and violent some of these moves can happen. Nothing's to say that the same thing can't happen now with silver. I mean, we could have some pretty radical re-ratings like that, and I think we should almost half expect it. But that's where I'd put the floor right there, $41.50, and those are the lines around $54, $55, $50 and 48. All right. Thank you for the question, TT. Rendium is reportedly more rare than platinum and has a higher melt point. Cool. You're welcome, Chris. And Steve, thanks for bringing up Go Gold back in November 20th when the market dipped. I'm up just over 31% on that one. Well done, Blaine. Yes, he's part of our premium group. On Gold may dip when Northern Superior shareholders get spun out on their On Gold shares. I'm keeping mine, but others may dump theirs. Should hit accounts today or tomorrow. Okay, that would explain some of the drop there. All right. Well, I appreciate you guys being here. Thank you for tuning in. I just wanted to get some of those thoughts out before I signed off. Want to wish you guys a very Merry Christmas, Happy Holidays, Happy Hanukkah, whatever it is that you celebrate. I hope you have a wonderful time with friends and family. Thank you guys for being here. I love doing this. If you want to play a little more alpha, then be sure to check out our premium service. You get a whole video, kind of like Monday Market Moves, but is specific to the portfolio. So company-specific charts, my personal portfolio, real-time updates of what I'm personally buying and selling. And then when you sign up, you're grandfathered in. And as long as you never cancel, you're grandfathered in at that price. We're actually running a special discount right now until the end of the year. It's our Christmas special. You get 15% off. I'll put a link down below, and you guys can check it out over on our Substack. Thank you guys for being here. Happy holidays.